Hi, I'm Courtney McQuade with Markets Group here at our 13th Private Equity Forum in New York City. With me is Sheryl Mejia, Managing Partner of Steward Asset Management. Sheryl, it's great to meet you.
Thank you for having me here today. It's just wonderful.
Absolutely,
Great
my
event.
pleasure. Oh, thank you. So tell me, what are some of the key trends that you're seeing right now in the private equity space, Sheryl?
Well, from our vantage point at Steward, where we're allocating to newer and often anchor investors in lower middle market managers, we're really seeing this will turn out to be a pretty good vintage in 25 and 26 because of the valuation levels. They're really being compressed by what looks like to be a temporary challenge in supply chains causing margin pressure, and additionally you have credit taking a bigger bite out of the EBITDA, so naturally valuations are compressing, but in a secular sense, by the time we're ready to exit, we hope that there's some correction of a lot of these aspects. The other trend I'm seeing is that managers are building out greater numbers, and especially companies and private equity, smaller, lower middle market managers building out greater relationships with banks, private lenders, because as they own companies and those companies go through stress or growth cycles, each lender has its own bite size or own appetite, and you've really got to build out, banks have a certain appetite, and some banks are being very aggressive right now in the market to capture that market share as companies grow. So it's really an interesting time. I think some of the challenges though with that private credit boom we've seen is that we're going to really stress test the managers who have issued, brought funds forward in private credit and see this is a good time for stress testing, whether they have the mettle to really manage through the various market cycles.
Well, and it's interesting that you say that. I mean, one of the questions I've also been asking people is, do you think private credit's hit its bubble?
I can't say. I think we're going to find out. That's that's the next chapter. We're going to find. I am not a private credit specialist, so I'll take myself out of that. I see so many good options. I will say though that the U.S. Small Business Administration, which has backed many emerging private credit managers, they did expand their platform and very forward thinking, knowing that the equity check is very important as well. And they expanded recently to include equity type of strategies, and we are one of the up and coming. We hope to achieve our final licensing stage with the SBA and be one of the the tip of the spear in terms of them providing capital and catalytic capital to with an equity check, so that all needs of small businesses can be met.
That's fantastic. And one more question, Sheryl, if I may. What should LPs be thinking about right now, especially with the emerging managers?
Yeah. Well, it's interesting because if you want to be in the top quartile of your portfolio and your allocations of private equity, you're finding that you have to be in Fund 1 managers, because 36% of Fund 1 managers are in the top quartile. And this statistic was the great work of my colleagues in the industry at Barings. They did the hard work and really it's a great statistic to know. So what we find is those Fund 1 managers, those Fund 1 allocators, they are about 5% are willing to do a first close and get some sort of preferential economics from anchoring stakes if they're larger, to just some economics or just fee breaks. And then 95% of that capital, which will start inventorying the Fund 1 managers coming out, but they're going to be closer to the last close. They want to let the first close investors do the coaching, do the work, get under and make sure the manager can get through the various stages of diligence so they're ready for the later close, who enjoy the platform being set up, ready for operational due diligence and legal diligence, and really have their portfolio management process lined up so that you really can put together the story of a newer manager, which is what have they been doing for the last 20 years, do those skills, and if you talk to the CEOs of the companies they engage with, does it make sense for their Fund 1 fundamental process of how they make companies better, stronger, and faster.
That's fascinating. Well, thank you so much, Sheryl, for taking the time to speak with me.
Thank you so much. Wonderful to be with you today.